Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 254 for February 24th, 2020. We are recording this live at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing the 335th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can get either the web or PDF version there. Today I have a great lineup for us for this episode. I've arranged for Melissa Armo, Marina Villatoro, Mercedes Van Essen, and Anka Metcalf to join us, and Anka will be moderating. So I'm going to go ahead and turn it over to her.
Thank you, David, for putting this together. And as always, this is such a great show with a great audience, and it is such a great opportunity for us as traders to network with other traders and kind of run through some numbers and run through the market. So thank you, everyone, for being here, our audience, and thank you, ladies, for accepting David's invitation. Hey, Melissa, Marina, and Mercedes, so nice to have all of you guys in here today. Let's start with Mercedes. Mercedes, can you please give us like a quick intro about yourself so our audience will know a little bit about you and what you do?
Well, basically, I'm a trading psychology coach, and I work with independent and professional traders, helping them mainly with the psychology of things. Of course, my traders really on the whole know how to trade. I've traded for over 20 years, mainly these days long term. Very rarely do I do intraday trading. That said, of course, today was a fantastic day, wasn't it? Well, certainly on the European session.
Yeah, I'm looking at the market actually right now, and I'm seeing the Dow futures down over 1,000 points, 1,050 points almost, and the S&P 121. So, there is a lot of fear in the market, Mercedes. And,
definitely. And I think you see, I look at the astrology of things a lot. And whilst I have to say, I would never ever trade of it, but it gives one a very good overall indication of what the collective is thinking. And this sell-off, it was on the cards. It just had to happen.
With the Mercury retrograde?
The Mercury retrograde has certainly a lot to do with it, because what you quite often get, you get sudden moves, a situation resolves itself, and it always, well, I say always, that's a bit dangerous to be saying that, but very often you get this when you have in Elliott wave terms ending diagonals, or so any move is overextended, and when you are in Mercury retrograde, suddenly whoomp, without any prior warning, this thing changes.
That's excellent. I can't wait to dig more into this matter, and because perhaps the markets are not waiting for, they're just, they want a reason why, and people, I think it's more traders are looking for a reason why the markets should start pulling back, but it's like a cyclical thing. So Mercedes, thank you so much for the intro. Let's go ahead and let's switch the microphone to Marina. Can you tell us a little bit about yourself and your company?
Hi, everybody. Thanks for having me. Did you guys see something really interesting? There are 3 M's. The invites all start with an M. How cool is that?
There are actually 4 M's.
Yeah, you have a last name with an M. I know. How weird is that?
I was just looking at that earlier. I was like,
that is very cool. So my name is Marina, the Trader Chick, and what I do is I specialize in teaching day traders, especially beginner traders, how to trade, and I also do E-minis. That's my thing. So I teach people how to trade the E-mini in a very simplified, I don't want to say easy because it's so not easy, but very simplified. I'm down to like 2 indicators. So I use a very simplified strategy, I guess you could say. Very conservative, although I am into scalping. I love to go for the short targets with smaller risks. Basically, so that's what I do. I'm also an expat. I live in Guatemala, Antigua, Guatemala, with my family. I've been living in Guatemala for over 10 years. And before that, we lived in Costa Rica. And I speak 3 languages. I don't don't know if that's really important for trading. It is for me because I recognize being trilingual that the market actually is a language of its own. So that kind of, I think, because my mind is already working in that linguistic type of way, I recognize that. So that's all part of like what I do and how I read the market.
Marina, I so agree. It is a language of itself.
Yeah, so it's fun. I try to have fun when I do it.
Absolutely. We have to have a little bit of fun, right?
Yeah.
And one of the things is that, capital preservation comes first, and then second, we need to make money. But if we have a little bit of fun along the way, it makes our life a lot more easier.
Absolutely.
All right. Our next guest is Melissa Armo, and Melissa's actually joining this show for the first time. So welcome, Melissa.
Thank you. Thank you for having me.
Awesome. So can you tell me a little bit about yourself and tell us a little bit about your company and what you do?
I own the Stock Swoosh. It's my own company, and I teach people how to look at gaps and analyze gaps in the market. So I've been trading now for 12 years, going on 13, and I only do gaps. So the market obviously gapped down today. Everyone was aware of that. We had a big gap down in the market. And I also appear on Fox News, Fox Business Network, CBS, and I'm on Cheddar TV today at 4 o'clock if anyone's around to look at some earnings into the close. So I talk about the markets and where we're headed, and I really don't think that there's going to be a steep sell-off here, even though that's a lot of people's expectation. I believe that we hold. I don't know the exact second time that we do hold, but I know that when the rally comes into the market, when the buying steps back in, it's going to happen in a big way. So I wouldn't be surprised if the market hits up and makes brand new all-time highs before anybody expects it, given the way the market looks here today.
I totally agree with you, Melissa, and I can't wait to talk charts a little bit with you and with all our guests here, because I think that this is just a panic off of the coronavirus, et cetera, World Health Organization, and also, basically traders that are, taking some of the profits, because if you look at charts, we're basically down, we're basically into late December levels, right? January levels, December levels. So we're not that steep down. So thanks so much, Melissa, for the intro. I can't wait to dig into charts. So a little bit about myself. My name is Anka Metcalf. I'm the CEO and founder of Trade Out Loud, which is a trading education company that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. I focus on futures indices, primarily on trading the futures indices in the first 2 hours in the morning, and then swing trading the rest of the commodities like gold and oil, and also stocks. I have a love affair with stocks, love trading stocks, but I do swing trade and active investing. I've been doing this for 17 years full time. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. And I'm also the designer of an institutional proprietary trading system that is based on price support resistance and so much more than meets the odds of price support resistance. I'm talking about the 7 layers of price support resistance. Just basing your trades on simple supply and demand. In my opinion, it's only 10 to 15% of the equation. I also correlate my trades with specific trigger times for the New York trading session, specific price zones, chart synchronicity and divergency, and of course, the strict set of trading rules that enables myself, of course, and my traders to identify trades with ease. All right, so let's go ahead and let's get into charts, ladies. Because we've had a pretty steep day in the market. I'm looking at the Dow right now is down over 1,050 points. The S&P is down 121. NASDAQ is down 386 points. And so is Russell. Russell is down 60 points. So all of the indices are down more than 3%, closing in on 4% of the day. Actually, NASDAQ is down 4.2% right now. So I know it's still the beginning of the week. It's Monday, and we're coming off of a very scary weekend where we had a plethora of news that came out with more coronavirus cases we had them in all places. Italy, so a lot of cases reported in Italy, a few deaths as well. As I was going going into this show, I read another piece of news that there are cases in Iraq right now, not only Iran, but Iraq as well. So people do travel, right? So ladies, if you can have your S&P charts right in front of you and take a look at those charts. And David would like to know, and our audience actually would like to know, where's the S&P heading this week? Do you guys think it's higher? But without a lot of explanation, let's just, kind of like have a good idea whether it's higher, lower, or do you think it's going to be flat going into this last week of February? And Mercedes, I'm going to start with you. So which direction do you think the S&P index will move?
Yeah, I haven't got anything here because I closed everything out, not knowing what we were doing. So, but I would say, I mean, the thing sold off since this morning, the S&P. I want to see how the close tonight looks like. That's the first thing. At the very least, we are going to get some sort of bounce here. I have to say, I am not yet convinced that this is the end of it. I think potentially this could, during the week, go quite a bit lower, but I don't think it's going to happen in a straight line. And the reason I'm saying this is because of the astrology, the coronavirus. I would like to speak to this a little bit, if I may, because, one thing I'd like to say is don't just blindly buy into the news. There is a lot of false information out there, and there is a lot of scaremongering out there as well. And when you look deeper and you go beyond CNBC and the likes of Bloomberg and the official news, there is a much more contradictory picture that is unfolding. And I'm not saying that the virus isn't spreading. It has, it is very dangerous, but it's also mutating into a less dangerous form. That is just not being reported. And as typical, we have got a reaction. I mean, it had to happen. I mean, going short on Friday over the weekend was a no-brainer in my opinion. But it's very easy to say that after the event. But to me, it was all lining up because just reading the collective consciousness and what the news is putting out there, and I would say at least 50%, and I'm being conservative here, is not accurately reported. So therefore, I do not buy into this thing. This is a reaction to the virus, or Sanders wanting to push the market down, and or all the other stuff that is out there. But just looking at the sell-off we've had today so far in a straight line, that to me is not an indication that it's going to shoot straight up from here to new highs.
Yeah, thank you so much, Mercedes. Marina, what do you think? Which direction do you think the S&P index will move from this Monday into Friday? So by the end of the week. It's also the last trading week of the month. So do you think it'll be higher, lower, or is it going to stabilize?
It's going to definitely stabilize. Normally what we have is big movements up and down, but it's been going on since the whole coronavirus scare, and we do have to completely take that into account. I know there's a whole lot of false information out there, but to be honest with you, fake news seems to be winning out more than regular news lately. So it does affect markets, how they move, even if we don't actually, I have no idea if it's real or not. I mean, I'm not in the midst of it. So, and I think the majority of people don't. So they kind of just go with panic and freak out. And, now that it's in Italy, Europe, it's a pretty big deal, so it's going to go down today, like you've seen it going today. But we've seen this happen, I think, for the past, is coronavirus we've been hearing about for over 6 weeks. And we've had these fluctuations on and off. So I definitely believe it's going to continue going down today, maybe even tomorrow, but it will stabilize and it will correct. I don't know if it's going to hit the same highs that we've had this particular week. Maybe it'll be more going into March, but it will definitely stabilize. The fears, they only last so much, it's so fickle. And it's a good time to buy, for a lot of people. I personally, not so much for my day trading. I'm totally looking at shorts, but for my long term, I just got into some pretty good positions that I've been waiting for this big sell-off. So I'm
all right. Yeah. And I agree, there are going to be some really awesome opportunities right now. So if you were not long, okay,
Yeah,
this is the perfect time to start, kind of have a shopping list ready.
So yeah, I had my watch list. This is for my longer term investments. So I got into like 3 stocks that I've been looking for ages, and they've been on, all-time highs. So I'm like, okay, perfect time. They might go a little bit lower, but I'm in it for the long haul. For my day trading though, I'm only looking at shorts, right? Because I do scalps. So that doesn't matter to me as much. But overall, it's definitely going to just stabilize for sure.
Yeah. So Marina, if you would put a percentage, how much do you think higher or lower?
So I think if anything, because it was the gap today and that huge gap, I don't really look at the gaps. However, it will definitely come back at least to where a gap to. So I think it will definitely go up to about
like
50%.
Yeah,
like 50%
yeah.
Easily back by Friday. No, it's not. It might not happen today or tomorrow. That's hard to navigate, considering we don't know that much what's going on in Europe, and this is definitely a Europe scare thing.
It is a Europe scare because it started overnight. We gapped down in futures. The market opened, it gapped down, and then you really don't see a lot of gaps in futures, but it did gap down based on the really weak close on Friday. But so you would be like 50-50?
Yeah. By Friday, I'm hoping that I'm not hoping, but I believe that it will get at least back to where we closed on Friday of last week. So it will stabilize in that way. It will definitely go up and down. It will be turbulent, but the market is always like that, right?
Right, exactly.
It's like a wave.
Exactly. Okay, Melissa, what do you think about the S&P?
I'm really watching more so today the QQQs. I mean, I normally look at the SPY because I look at the banks, but the banks are gapped down today and are holding really well. So the Qs are sitting their butt right on support, and Apple, which again is very tied into the Chinese market, is absolutely nowhere near the lows of the day. So Apple right now is green on the day, even though it gapped down. So if I look at banks are holding today, Netflix is holding today, the Qs are holding today. So and this is my general overall feeling of 2020, just being in the market, just feeling it, which if you're in tune with the market, you can feel it. The market has been so strong this year. It's been really difficult to get any follow through whatsoever in shorts, whether they were overnight shorts or day trade shorts. What's happening today is like a fight between the bulls and the bears to see who's going to win out. But overall, the market is in an uptrend, and today didn't break the trend of the market. Even if we fell, and this is an insane number, but I'm going to throw it out there, even if we fell all the way down to the 200-period moving average, down to 306, 305, 304 in the SPY, we'd still be in an uptrend. That would create a huge amount of panic in the market, but we'd still be in an uptrend. So the market has been so strong for the last 2 months or the last 6 or 7 weeks of the year since we started 2020 that I think that, like I said, I wouldn't buy today. I play momentum. Today, the momentum is down, okay, but the overall strength of the market is still valid. And if we gap up tomorrow, then the buying could come in. I don't know where we close off the week because I don't know how we open tomorrow, but I think tomorrow's a significant day for the market to see how we open and where we gap, because it would show what's going to happen right after the sell-off. I don't think that what the previous lady said as far as to see that this was an easy short into the weekend. I think any time in this market that you take a position right at Friday into the close into the weekend is a 50-50. Why? Because we're so tied into everything else that's happening in the world, whether it's tariffs, whether it's viruses, whether it's blah, 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 blah. There's so many things that are tied in that you take a shot. If you're right, you can win big like today, but if you're wrong, you're going to be upside down on your trade. So I think it's a lot better to take your profits off into the weekend and not really to get any new positions into a Friday late in the day. We could have very well held on support today. I believe that this is an overreaction because people are expecting first quarter earnings for companies to not be what they think. However, first quarter isn't over, one, and two, first quarter isn't over to say what they're going to do for the reporting. So it's not like it's April and companies reporting first quarter. It's not first quarter reports, and also first quarter isn't open. We're halfway through the first quarter of the year. So that's my 2 cents on it. I can't say where we close this week. That is so far away. I can't even say, but I will know tomorrow morning. I'll have a better idea of it. Any gap up tomorrow that holds the low of the day would be good for the market to create more buying. I wouldn't buy any stocks today. I wouldn't buy in the dip. I never buy in the dip. I buy momentum momentum. Right now, the momentum today at the second at 122 is to the downside, but the market is in an uptrend. And many stocks are strong. In fact, if I scan everything in the world today, the only thing that I called today short that to short as a put was Facebook, and it worked. The stock dropped, and this stock could go down to the 200 period moving average around 194. So if you want to short Facebook today, and if you want to carry that overnight, I think we could have a baby gap down in Facebook, or you could do the Facebook today and just get out of it before the close. AAL and the airlines are lower. I think this is specific stocks, specific sectors you got to look at, because there's certain sectors of the market that are not gonna budge, even if it looks like they're not gonna. I mean, Apple has been a mess ever since the earnings. The earnings should have broken out over the high, which it did, but it didn't go anywhere. It didn't have any momentum. But then every time you have bad news in Apple, then it falls a little bit, but then it never really goes anywhere to the downside. And Apple's green today. So, I mean, people are probably buying Apple right here. I would not do this. But if Apple gaps up tomorrow, it's probably a nice buy opportunity.
And always Apple, speaking of Apple, they're always very conservative. They're coming out and saying, hey, we may not meet, expectations going into the second quarter because, at some point the supply chain may be interrupted because of coronavirus or different reasons.
Yeah, they're doing that to cover
Apple
their butt.
always over delivers.
Yeah, they're doing that to cover their butt. And I think a lot of that's what, it's like, okay, so then maybe this earnings wasn't a blowout. So guess what? Next earnings probably might be. Do you know what I'm saying? I don't know. I mean, that's so far away, but it's like they're doing that to cover their butt. So fine, whatever. They're conservative.
Absolutely. I totally agree. So, okay, here's my thought on the mini S&P. So I think that I have to agree with all my guests. We have to make sure that we analyze today's close and see how we close. Depending on how we close, we could have better information of what's happening into the very near future. The general idea for the mini S&P is that it's sitting right now on support from December 31st. The market, the S&P 500 was at this level on December 31st. It came in, if you guys recall, on January 31st, which was the first big bar down in the S&P, where the S&P dropped from 3280 to 3214, and we had an inside day. So following this sharp decline, we came right into a technical point from the prior support, and also we had the 50 SMA on the daily, and then we had an inside day, and then we had two continuous gaps up into the into the SPX 500, and then we started to rally. So soonly after we pushed higher, we ran over the high, we went through the 3340 level, and we started to push higher, making new highs. So I have to agree with Melissa, and I have to agree with all my guests. We are into a very, very, very strong uptrend, and because we were talking about levels here, I think that even if we come back into a minor support of 3,000 in the SPX, we're still going to be in an uptrend. If you guys recall, we were 2000, for those of you that were in the market in 2007 and 2008 and 2009. 2009 presented itself with humongous trading opportunities, and we had a bit of scare in the market at that point, but we had devaluation. This is so much different than what we are transitioning right now. We don't have any devaluation. Apple is not devaluated. Google is not devaluated. Nvidia is not devaluated. These are stocks that are still very strong, and they're going strong. This is just a pullback in the market. This is not, and I agree, 2007, 8 were scary, but those were also pullbacks into a major trend, and those levels that were determined, those lows determined the extensions for today's market environment for that 3,400 in the S&P, and we came very close to that. We came into the 3,393. So to come back to the question, we need to see how this major support level is holding here, the 3,220 in the SPX. If we manage to hold this is fine, and I think that we may resume, but don't forget the markets may also want to puncture. They want to do that slingshot effect. They pull in a little bit before they launch higher. So I'm going to be on the watch out for that, and definitely just play with the momentum. Like Melissa stated, we are into a down momentum, so the momentum is still bearish. If we actually open with a gap down and below the 32.20, I think that we're going to start heading lower, and the next, let's say, target would be into the 31.50 level. So that is where we could see a more advanced decline. So going into next week, like 50-50 shot, we don't know with precision based on the current context if we're going to get a further pullback, because it's all related to this support level in the SPX right now. If 32.20 is going to hold, we're gonna start moving higher. If tomorrow we're gonna have an inside day and we're gonna start pushing higher, like Melissa said, she's looking for a little gap up. But if we're looking for, if we're gonna get a gap down, I think that we're breaking this 32.20, and 32.20 is gonna become that ceiling, that lid for price, and we can expect much lower prices going into the end of the week. So today's close is gonna be super, super important, for our directional buys for the rest of the week.
One thing I want to say here, the reason that this is, everyone's talking about it and it's creating panic, and I was talking about this on CBS this morning, it's because we're negative on the year, but it's February 24th. Okay, we're 8 weeks into the year, barring holidays. So, I mean, if it was May, if it was June, if it was August of 2020, we'd be end of the year, that I'd say, okay. But I mean, we've made countless brand new all-time highs to begin the year. Far more bullish this year to start the year than I ever thought we'd be, in December. So the reality is we're negative on the year, which is creating more panic for people in their mind to discuss this everywhere. And plus the virus. But the thing is, we're 8 weeks into the year, so you gotta look at what's happening in reality. And also, I really am very good at seeing weakness in charts. Most of the classes that I do are focused on shorts because I like to short. I love to short. Shorts you can make a lot of money if you're short, right? Because panic happens quickly. But the fact is that right now today, like it's 1:30, the market closes at 4. This to me is not a panicky reaction. We had it in the gap, but I'm not seeing a follow through here today, because if we wanted to sell like a crazy person today, we'd already be through that area you're talking about, 322. We'd be through 320. We'd be at 315 right now. We'd be falling. We're not, there's a baby bar. We're even backing up right here now at 1 o'clock. The market is trying to hang on. And this is what I was talking about earlier. This is like a tug of war between the bulls and the bears. You have some selling that came in, conservatives who wanted to sell positions, or people that did short the market from Friday into money that got out with profits. But I don't think that this is the end of the world. I don't think you have the big institutional money that's saying that we got to get out, the market's going to collapse and blah, blah, blah. I just don't see it. And again, when we make new highs, I don't know. But I do know one thing. It's going to happen like lightning, because that's how the buying has been in the market. It's been happening unexpectedly in big ways. And if you want to look at some of the earnings we've had this year, and I'm going to talk about Tesla really quickly, I've almost never seen a move like that in a stock. It happened this year. I mean, we had, and also Stamp. Mm-hmm. We've seen just gimungo moves in stocks like I've almost never seen in my life. I mean, Amazon was up 287 points on the earnings. Then it rallied back over the number and ran up to 280. Amazon was at 1860. Amazon ran 120 points from the day before the earnings within less than 2 weeks. That just happened 3 weeks ago. So, I mean, like, we've seen just some of the biggest moves I've ever seen in stocks. And that's not going to just disappear in a gap down like today. Again, if we were a lot lower on the day here, a lot lower on the day that we are, then I would have a different story to this. But again, remember, support and resistance are areas. We did break the low of the day here, but we're trying to hang on. So that's my 2 cents.
No, and I totally agree. And the price velocity this year was incredible. I mean, and not only that, but I think everything shifted. And there was a switch that happened in 2018 when the market was hit first time by volatility, and we have not seen that scary part of volatility yet. I don't know if this is going to be the start, or if this is going to be, the new norm with volatility. But since 2018, we have seen literally explosive moves in some stocks, like Melissa was saying, like stamps.com. I mean, come on. I mean, what are they doing?
Good. If you're an active trader, volatility is good. If you're a long-term investor, it's scary unless you know what to do or you have a good financial advisor. If you don't, you're scared out of your mind and you don't know what to do. And that's why you see selling come into days like today, because there's a lot of people that don't know what to do. There's more people that don't know what to do in the market that do know what to do. And there's a lot of retail traders that probably shorted the market today. Guess what? When the market gaps up and institutional buying comes in, those people are going to get stopped out and they're going to be down and they're going to exit their shorts. It's going to create a push up. It could happen as early as tomorrow morning. I don't know. But I just know that volatility is good for active trading if you get it in the right side. You can be ultra conservative conservative and wait for confirmation, or you can throw caution to the wind and get in everything. I was very, 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 very cautious today because it was a 50-50 if we were going to fall, because we didn't fall out of the gate. In fact, we didn't even fall and break the low till noon. I said to me, this isn't like crazy town sell-off.
I agree. And I was in the trading room today. I was literally saying the same thing. Like, we don't have, maximum odds in our favor. I like to take trades on confirmation. So what that means that I'm waiting for those odds to stack up, and I'm waiting for 75%, 80%. Today it was a 50-50 chance. You could have gotten into a long and you could have stopped out, or you could have gotten into a short and you could have stopped out very, very easily. But I want to get to the next question here. And do you guys think of any other reasons why the S&P may be heading higher or lower for the week? And Mercedes, I'm going to start with you. Do you have any other particular reasons why the market should continue higher, or if the market should drop from here on?
Well, I mean, obviously, I do not have a crystal ball. As I've said early on, from an astrological point of view, we are in certainly big uncertainty this week and next week. So I think it's going to be very volatile at the very least. When you look at the longer-term structure of the market, I just want to say this. I mean, if we go back to the lows in last year in October, and you look at, we've had 3 up legs from there. And when you just look on a daily chart on the overall structure, the weakness in the market has become very, very apparent. And, without going into, the Elliott wave aspect of it, just looking at the overall structure, to me, it was pretty obvious that this market was going to turn around. Now, as I said again, I think we really have to see how it's going to close tonight. It is volatile. We have definitely a situation whereby we are reacting to news all the time, which tends to be short-lived. The point is, if we're going to get certain key levels going to take, if they're going to be taken out, we are going to stay a step lower. It is possible. I am certainly not discounting this at all. And the way I look at the markets, I like to trade very small positions, so I keep my risk low so that I can keep positions overnight without losing my shirt if something goes against me. And then I wait until the market basically stops me out, when I'm right. And obviously, if I'm wrong, well, obviously I get stopped. And that to me is a very good way to trade, because it keeps you in the market when you're right. You move your stops and get out, when a level gets taken out.
That's right, Mercedes. Marina, what are your thoughts? Any other reasons why we should be looking long or short?
At the moment, I personally, like Mercedes said, I also don't have a crystal ball. It's so hard because you just never know what's going on. But I believe that the market, it will probably go lower simply because it has hit Europe. And I know the coronavirus is becoming, this really weird thing that it's so uncertain because it's an epidemic, right? And nobody has gotten their hands around it yet. So we don't know the effect that Europe cases are going to take on altogether, right? However, it is going to stabilize because there's also not as much business going on as, for instance, how much we rely on China. With Apple, for instance, he even said it, that 50% of their production comes from China. And China's a ghost town right now. So obviously everything's kind of halted. So not much is going on as much as in Europe, as much as just the fear that it has hit the Western world. So I think once it stabilizes and once we really get an idea exactly what's going on, that's when it's going to kind of stabilize and then head back up. Maybe not boom up, but it'll just start to go back to its normal levels that we had before, right? So yeah, if you're a long-term investor, to be honest with you, just don't look at your investments right now. Unless you want to buy some new ones, just don't, because it's depressing. Everything in my portfolio is big red. So in that respect, yeah. But if you're day trading, it's amazing, you have to have a strategy. You have to understand what you're doing. But right now the market is shorting, so you just continue looking, at those movements. You have to have that. I think day trading is completely, at least for me, especially for a scalper's point of view, because I go for one pointers. it's kind of irrelevant what the overall market is doing on a whole, simply because I just look at what is happening in the moment, right? Like at this moment, and I'm looking to see where it's going. So that's how I gauge it. And I totally think it's going to stabilize. There's not as much business in industry as China has had. And so I think we've already passed that. And now we're kind of going to be dealing with the results of China not being productive for the past month and a half. And that I think is going to come out a little bit later, right? When the companies are going to start to scramble and see what they could do for production. That's kind of my 2 cents.
Yeah. Thank you so much, Marina. Melissa, would you like to add anything else? Any other recent economic events? We know that, for the week, there's not a lot happening. It's going to be a pretty quiet end of the week in terms of economically wise on the calendar. Any other reasons you might think why market up or down?
Again, I really just read the price action and the gaps to determine on the live day. Fundamentally, I don't think there's any major events out this week. We do have some earnings. Shake Shack's out tonight. Hertz is out tonight. There's a bunch of retailers out this week too. They could affect the market, but it's not like those things are like Apple or something like that, where they would completely affect the market. So I think that there's nothing fundamentally that's going to change the market between now and the end of the week. There's no major earnings that would move the market between now and the end of the week. So I'm really just going to be watching to see if something occurs unexpectedly, like some new cases of people dying or something else like happened over the weekend, that if it creates another secondary gap down in the market between Tuesday and Friday, that would not be good. So this market pretty much needs to hold where it's at today. It really much needs to hold right here. And if it doesn't, then we've got a long way to fall. And I think that's why taking a new position here long is a 50-50, and taking a new position here and holding into tomorrow is a 50-50, because I don't know how we act in the next 24 hours. There's no reason to think that we're going to continue to sell off, and there's no necessarily reason to think that we're going to hold. Regular retail traders don't control the market. Institutions control the market. And say you were on a trading desk and you worked for Goldman Sachs, you'd be looking at many, 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 many things today that we're not looking at, we're not privy to, and we have no idea. So that's why I read the price action and I read the trading that happens in the post-market and the pre-market overnight, because that's when trading desks take positions. And that's what happened in the sell-off here. You did see some selling, but you didn't see an extreme amount of selling. So this is a 50-50 about the follow-through, but I'm not going to hesitate if I see follow-through to the upside to go long, and I'm not going to hesitate if I see follow-through to the downside to short either. So there will be no hesitation on my part tomorrow. Today, I was ultra conservative, and like I said, the only trade I called that was to the downside was Facebook and AAL, and the airlines could follow through lower because people don't want to travel, not necessarily because they're afraid of getting a virus on the plane, but because there might be somebody sick and then they're quarantined for a month, and that's like ridiculous.
Exactly. And same with the cruise ships and with all means of transportation. And in Europe, I was reading that there was a train that was stopped coming from Italy, going to Austria, that was stopped and turned around. So again, there's a lot of uncertainty, and we know that the market hates uncertainty.
Yeah, like CCL and RCL are falling right as we speak. I actually didn't do anything with these today because I was really focused on the market and the airlines, but both of the cruise ships are falling today, and they could be lower. I mean, the cruise ships were a good short today. The CCL and RCL are good shorts here, because that's where a lot of people have been stuck and quarantined, and the airlines are going to take a hit because people aren't going to want to pay for airline tickets, or are going to cancel their reservations because of the fact that they're scared to fly. So those are the two industries that I would focus on. I would be specific on stocks and specific on industries, but I've said that all along. And again, Tesla, which has had an enormous move up, probably would have continued higher last week if it wouldn't have been for the market. And that's one of the things here also that I'm expecting another move up sometime. And I really think that's going to be soon. It's going to be this week, because people think that's going to go to 1,000. It hasn't gone to 1,000 yet. That number is looming out there that the stock's going to go to. And any bullish activity in the market is going to propel that stock higher once again. And then it will finally get over and get up and through to that number, that big number.
Oh, I totally agree. So again, this week, from my standpoint, I'm going to take it one day at a time. No aggressive swings, know, aggressive. And in fact, we did come just off option expiration on Friday. And as a typical rule, I do not initiate any kind of trades, short trades or long trades or swing trades or anything of the sort on option expiration day. So I just wait for it. It's kind of like a calibration Monday. But one thing that I find very interesting, you know, looking at the S&P chart is that today, yes, we came in with a little bit of volume coming down, which I wouldn't say was unexpected because we all knew what happened throughout the weekend. But I have to tell you guys that, you know, what I'm seeing and what I saw, I mentioned earlier when we talked about the mini S&P, is that on December 31st, when everything, you know, kind of like came out, you know, there were new cases of coronavirus, we had far worse volume in the market. So that was a heavy selling. And don't forget that the next day we had an inside day, and then we had a rotation update from that point. So I don't know if this is going to be a repeat of that or what the case is going to be, but definitely worth watching this level and for a continuation higher. And like I said, you know, we are so lucky because we are day traders, we are swing traders, and we can take advantage of smaller moves, and we can really care less whether the market is going up or down. We are going to make money, you know, on either side of the tape, and that's the beauty of it. All right, we're going to move on to the next question. And the next question I would like to, Mercedes, I'm going to start with you. What indicator influences your trading the most? What is that one indicator that you go to for simplicity, for clarity in the market move? Is there one indicator that you particularly use, whether it's a moving average or, you know, you're looking at support resistance, RSIs, MACDs, price action, etc.?
Right. Okay. As I said, I do very little day trading, and so I look basically at different time frames. I don't use any indicators. I do Elliott wave, as I said. You know, basically pattern recognition. Have done it for many years, and I use a 50 and a 20 EMA. That is all that is on my charts. I use some market profile for shorter term time frames when I look at 4-hour hourly charts. And to me, it's really a methodology more than a very precise entry and exit strategy I pursue. And that's worked for me best over the years. It's very robust, but of course, as I say, it's longer term. If you are looking to scalp and take just a point out of the S&P and whatever, obviously you have to trade in a very different way.
All right, thank you so much, Mercedes, for sharing this piece of information with us. Marina, any special indicator?
Yeah, I absolutely love the MACDs. I use them all the time for everything. So to me, they just seem to be the least lagging indicators, simply because I look for strength and a lot of divergence with the pivots and the price action. And if I was to just choose, if I was only to be able to use one indicator, it would definitely be that one. My personal charts, I use two indicators. I use EMA lines and the MACDs, simply to gauge which direction the market is going with and in strength. And if there's divergence, I tend to just sit out, period, and never do anything until divergence clears and until I have really strong movement in one direction with the MACDs and my price action.
This is so great because Mercedes, she's a long-term trader. Marina, you're a day trader. What time frame do you trade?
No, so I use tick charts, which is transactions. I use a 610 tick chart. So each one of my bars shows 610 transactions. So it's much more easier to be able to gauge volatility and volume by watching that. So it's not a time frame, it's more of a transactional approach.
Exactly. And that gives you a great idea about volume as well, these tick charts. Yes. And I just want to highlight something here that as futures traders, you're a futures trader. I'm a futures day trader as well. So in volatile times, it is great to kind of like zoom in and see where the price action is bulking, is, you know, kind of like resting more on the tick charts than time frame charts. And I know this was a big help for me in 2018 day trading.
Yeah, I love it. It's like you don't have to use a volume anymore.
Exactly. Exactly, because you have the number of transactions. Exactly. exactly.
Yes.
So you can see, you basically have a gauge because you're getting it on confirmation and you're pretty much writing the institutional move, especially in the morning. Yeah,
exactly.
Awesome. All right, Melissa, any special indicator? Do you have a crystal ball?
My crystal ball is my mind, by the way. My heightened intuition. But as far as indicators go, I look at price. Price is an indicator, which would be in the form for me of candlesticks. So you can look at candlesticks to read price, or you can look at bar charts. But when you could also just read the tape, which would be reading price, but that's a lot more intricate. But I look at price. That to me is the best indicator. And again, I'm looking for momentum. But a lot of people don't realize that they're looking at moving averages, Fibonacci's, a lot of other things when they think of indicator. But price is an indicator. So for me, it's the candlesticks, and whether they're moving up or whether they're moving down, and if the price is where the price is closing, where the momentum is opening, all of that.
I agree. I'm pretty much along, your lines as well. I am a pure price action person. To me, also candlesticks and price action is the most decisive into forming the buys for the day, going from higher time frames, going into the momentum on the daily. And as a futures trader, I always watch and see what's happening in the stock market and keeping a close eye on components, right? Because when we're trading futures indices, we're not trading individual names, but we're trading, bulk. So we're trading in NASDAQ. For instance, NASDAQ, Melissa, I know you mentioned it earlier because your focus was the Qs this morning. I was actually looking at NASDAQ this morning and I was mentioning it in the trading room and I was like, okay, NASDAQ has a lot of relative strength compared to the rest of the indices. Even though it was a little bit more accentuated in the decline, it was stronger. It had a really robust structure and it continues to have that robust structure because at the end of the day today, the day is not yet, we have about 2 hours to go, but NVIDIA, take a look at NVIDIA, guys, NVIDIA sitting on the 20 SMA into support, really comfortable and cozy right there, still holding on a major level. Microsoft, take a look at the Microsoft.
Microsoft has had a huge rally today. Microsoft dropped, fell off a planet, and really quickly reversed. Just the same thing as Apple, but Microsoft was even more so because I think it touched like 165. And
exactly.
Microsoft is one of the strongest stocks in the market. Even though it fell off, it just made brand new all-time highs a couple of days ago. Microsoft was one of the strongest stocks in the market. Amazon is one of the strongest stocks in the market. Tesla is one of the strongest stocks in the market. NVIDIA is one of the strongest stocks in the market. I think we're going to close green today. I'm just looking at this here. Into 2 o'clock here, reversal time. We dropped and broke the low from 12 o'clock into 1 o'clock, and that was about it. Now we're back and we're almost green on the day. Like we're probably going to rally here into the close, which is a good sign for a gap up tomorrow morning. But the best case scenario for the market right here is if the market holds today, green, closes green into the 4 o'clock close, and then gaps up tomorrow morning. And I will say one more thing. Stock switch tip of the day today is, and I told this to my traders, is if you have to question it, if you have to think about it, if you have to think too hard what to do, then the answer is no. If you aren't sure whether or not to go long or short in the market today, then do nothing. And that's the answer. If you have to think too hard, again, we're talking about, let your intuition guide you, okay? Absolutely. Don't let fear and panic guide you.
I know, because there are a lot of traders out there that think that if the market is open, if they see a huge move up or down, because today we had a considerable move down 1,000 points. They're jumping short, and it's instinctive that a lot of new retail traders are just jumping in a short because you're having the fear of missing out. But what you're missing out, you're going to be missing your account up. You're going to be missing your account a lot if you continue to do this. It's having the patience to wait for a formation. And pretty much along those lines, I tell my traders, listen, if you have a chart in front of you and if you have to squint to force a trade in, then leave, because that is not a trade. You don't have a trade there. You're forcing a trade there. You don't have to trade. You don't have to be a liquidity provider for the market. Just wait for the market to line up. And the other thing, you have patience. Patience equals money, and at the end of the day, you want to have, you want to live to trade another day. You want to live to trade another week. You want to live to trade another, another month and another year. And that's how it goes. Okay. All right. Let's move on, ladies, to the next question. Okay. Hold on just 1 second. Okay, here it is. I just lost my page right here. Just bear with me. Okay. Do you guys have anything, in particular that you're going to be watching stock-wise, indice-wise? for the rest of this week? Do you have like a go-to, let's say, I don't know, let's say emergency plan for the market? Mercedes, I know you're not actively trading in the market, but what are your thoughts? Should we be prepared? Should we prepare a pool of stocks for the short side? Should we prepare a pool of stocks to the long side? Do both? And are there any stocks in particular that we need to focus on in this current market context?
Well, I have to say I'm not sure about American stocks because I don't trade them. However, what I am looking at the moment are some of the currencies, again, a bit longer term. And cable is one of them. Aussie dollar is another one. And I think it certainly warrants watching them every day to see for potential early reversal signs here and some good trends setting up. I'm also keeping an eye on gold. Gold is so high. Could we see a decent pullback here? Possibly. What I don't understand is that silver really has not at all shown any follow through. That has made me, I have to say, always a bit suspicious of the entire gold rally. That said, there has been some good money in some of the gold stocks, of course.
Absolutely, gold has been on fire. Yeah, Marina, anything thanks so much, Mercedes. Marina, anything in particular that you're watching for this week? I know you're a futures trader, but do you have anything on your radar?
So I usually, when I open up my charts, I'm like, part of my prep is to go to forexfactory.com, and that's usually where I see if there's going to be any red news alerts that I know not to be anywhere near. I'm also looking to see if it's FOMC, if there's certain meetings, and that really gauges things for me, because you don't want to be in the market when, like, for instance, if the FOMC is in play, or contract options expiration dates. They're also, that could really affect the market, even though it's not a direct thing, but it can become more erratic, and you never want to be near an erratic market. So I would just sit and watch more so, but I am very aware if there's like some high or sensitive news topics that might also kind of affect it, right? Other than that, not really. You never know what news you're going to get about, like, world events. Anything can happen overnight or even during the day, and Trump could send out a tweet that could totally just, be only beneficial to him while the rest of the world, suffers. So it's hard to gauge, but the only thing I can control is what is definitely on the agenda, and that I find Forex Factory.
All right, that's awesome. Thank you, Marina. Melissa, any thoughts? Anything, what is on your radar this week?
Just really watching Hertz, which is out tonight. We'll just take a quickly look at this now. Hertz was down today with the market. Hertz overall would be a really nice short if it ends up gapping down in the earnings. I think that would be a good short under 19. So I'll be watching that tonight. And then Shake Shack was one everybody loves. That was down today as well. With everything else, I think Shake Shack would be a great long over 80. I don't know what these do, and I wouldn't take positions until after the report, but those are the ones that I'm watching tonight. One is a long and one will be a short, depending if they go in the right direction.
All right. Well, I have to tell you that I am also watching some stocks for today. Like I said, for indices, my game plan is to watch the close. And if we gap down, or if we continue to slide below the support level in the S&P, definitely the direction and the momentum is going to be the short side. If we get an inside day or a mild gap up going into tomorrow's trading session, in the New York trading session, then I'm going to look for longs. And the first stock that I have on my radar for a swing is going to be CME, which has been holding really, really well, and also CRM, which has bounced already off of the similar support level that we talked about earlier in the mini S&P, and the support was from January 27th. I'm also looking at some stocks that are very interesting to me, and I've started to compile this prepping for coronavirus, let's say worst case scenario, and I have some stocks that are on my radar right now. And just like, when hurricane season hits here in South Florida, we have, our go-to stocks like Lowe's and Home Depot and Generac and all that stuff, and Costco and Walmart, etc. I think that it may be some opportunity if the market maybe will be heading lower. I will still continue to watch, stocks like Costco and Walmart. As far as retailers, the sales are going to be really high if something should occur, because people are going to start stocking up. I'm also going to look at 3M because, there are a lot of medical supplies, APT, Guild, which may be testing a new vaccine. I'm going to look at Clorox, right? Johnson & Johnson, perhaps Procter & Gamble for sanitizer, detergents, and all that stuff. So I'm compiling this list. I'm just saying, I just have it in there, but other than that, I'm pretty much going to be very light in the market until the next directional bias. I'm going to try to hold positions for smaller gains because we are in a very turbulent environment. The market has already popped right now about 100 points from when we started the show. And I continue to hold gold. At the beginning of the year, we had our eyes on gold, and I initiated a trade in gold. We actually had one trade, one swing in January, and the second trade in that originated 2 weeks ago in gold at 1580 was the call price, 1580 and 1590 for the gold price. And I kept on saying since the beginning of the year that I'm going to hold a core position in gold, which is incredibly cheap to hold, is taking into consideration that small accounts can participate in. Everybody can take similar trades like this in gold, especially that you could trade mini gold, micro gold. So there is a plethora of opportunities for all the account holders. So I'm still holding on to gold. If the market is going to shoot higher, gold is going to teeter-totter probably a little bit lower. So I'm loading. I'm looking to reload. I only have one lot left. I layered out into targets. I have one of my targets is 1700. Came very close to that target. 1720, 1750, 1780, and even into the 1800 for the rest of the year. I think this year is going to be the gold year. We haven't had rallies in gold in a very long time. Pullbacks in gold I think are going to be highly tradable this year. So I'm going to watch two levels in gold for pullbacks this week and even into the ongoing week into the 1660 and 1640. And if these are going to start working out, these are going to be my go-to. So I'm going to be looking for 4-hour rotations from 1660 or 1640. If they should be setting up, that's going to be my next reload into gold. So all right, so before we close here, just gonna want to do a quick round, and I want you guys to let me know where traders can find you, and if you have any special offers for us today and for the listeners. And then we're going to talk a little bit about next week's event, Women Teach Trading. So Mercedes, any special seminars, webinars, or products that you are offering this week, and where can traders find you?
Well, my website is mentalstrategiesfortraders.com. I have actually no special offers at the moment. I don't do special offers very well. I have to say. That said, I did a webinar for a Ninja Trader last week, and if people want to go to Ninja Trader, they can see the webinar there, and there is a special offer on there for my trading psychology course, which is a self-directed online course, and it gives simultaneously access for a month to the Awaken the Inner Master Trader, which is a group coaching program that runs a few months. But people will get, if they get the Improve Your Trading Mind course, they will get a month of the Awaken the Inner Master Trader to see if it is for them.
All right. Thank you so much, Mercedes. Marina, anything in your pipeline?
Hi. Well, everybody could find me on thetraderchick.com. And actually, if you go to thetraderchick.com and press on my pictures and whatnot, you could get a free mini course that I help with to understand better where to start trading, what you need to understand about trading, all of that. And that's completely free. So you could easily do that at just thetraderchick.com. And also you could email me if you want, thetraderchick@gmail.com. I'm always around, and I love helping people to understand trading better and to learn the trading and everything. So I appreciate being here today as well. This has been really fun. And I'm really, really excited about next week's women teaching trading. That is so great. I mean, there's not enough women doing this. So I really focus also on helping women learn to day trade and kind of get past the fear of it and just like the complexity. And that is all in my free mini course on thetraderchick.com. And thank you.
That is awesome. Thank you so much, Marina. Melissa?
Yes, I have a class this weekend, which is my main class, the Golden Gap course. It's Saturday and Sunday, the 29th and March 1st. And I'm running a special for the class this weekend, which is the trading room free until the end of the year if you sign up by Friday. So that's what I have going on. And obviously it helps to be in the room to get the live calls like the AAL today and then my read of the market.
It is essential to be assisted, exactly, especially in the beginner phase. Great deal, by the way. And where can traders find you?
Traders can email me at melissa@thestockswoosh.com or go to my website or just follow me on Twitter. And again, I post a lot of my TV clips on Twitter when I'm on to watch me and any specials that I do as well.
That's fantastic. Thanks so much, Melissa. And really looking forward to seeing you ladies at the Women Tell All next week. Yep.
Can I just say, I forgot completely, but I'm presenting at the Traders Expo in New York City. And I don't know if anybody's going to be there, but I would love for you guys to come by. I think I'm having 3 different presentations. Sorry, I just completely spaced it, but I'm live there. So if anybody comes, and majority of it is free. Sorry, totally spaced that one. But
That's awesome, Marina.
Okay, sorry.
Fantastic. Okay, so if you guys want to get a hold, and if you're interested in swing trading stocks, or if you're interested in day trading futures, you can head on to tradeoutloud.com. Shoot me an email at info@tradeoutloud.com if you want to find out more information about what we do and how we trade. And we also have like performance updates on our page. So if you go to the trading room tab, if you tap it on, you can access our real performance portfolio. And we're also releasing the new portfolio at the end of each quarter. And that's because we are still in some swings in futures as well, like this trade in gold. And it's only fair for our members not to disclose our entry prices until we are out of the trade, exiting the trade. So, all right, I want to thank my guests so much. Have you guys, one last question, have you guys decided on what you will be presenting for next week at the live online women's event? Marina, gonna start with you.
I did, and I can't remember the title right now. Just totally.
I know.
Totally spaced it. So it'll be a surprise. Okay,
it'll be a surprise. Guys, it's gonna be futures. Melissa, I'm pretty sure you're gonna talk about gaps or options or both.
Yeah, I'm gonna talk about gaps. That's what I always talk about.
Awesome. And Mercedes, you're going to be talking trading psychology. And guys, Mercedes is such an amazing psychologist, and she has some really amazing classes. To go to her YouTube, you can find a lot of information. Trading psychology is so important.
I thought I'm going to do something a little different this time, and I'm going to do a little bit of a more interactive session where we're going to do brain harmonization, meditation, and perhaps a little bit of a kind of a live mini coaching session.
Oh my gosh,
the first part will be me talking, and then the other half will be interactive.
Mercedes, that sounds so amazing. Should we bring our yoga mats?
Yeah, why not?
Oh.
and your earthing mats.
That sounds very, very interesting. Amazing. Well, I'm going to be talking about day trading, and I'm also going to tap onto a subject that I have many requests on, and that is stock swing trading for the event. So for those of you that are listening, book your calendars, because next week we have literally a super sweet treat for everyone. And we have an online all-women trading event where everybody is literally invited to participate. So the event is not only dedicated to women, because we've had this confusion and we had a lot of trouble naming the event, because a lot of times, men would ask, can we attend? So yeah, so definitely the event starts on Monday. It'll start at 9 a.m. It's going to be a full week of trading education strategy. We're going to be talking about stocks. We're going to be talking futures. We're going to talk Forex. We're going to talk trading psychology. We're going to talk cryptocurrencies. And again, we're going to talk about day trading, swing trading, options trading, investing. So all these are going to be lessons. They're going to be like mini workshops. So be prepared to come with a notebook and a pen and take some notes. We're going to have some really amazing deals. We have some pretty amazing sponsors that are really kind enough to spread the word. This is the biggest event that we have done. Last year, if you recall, we had a little pilot that I hosted, and it was a one-day event. And this year we grew so much, and hopefully we're going to grow and have this as an annual event. So this is, let's say, we had the pilot last year, and this is the big event. And we're going to be teaching a lot of powerful trading education and strategies. It's going to be a full blast. With trading secrets, tips, tricks, etc. So it's free, guys. You can't, everybody likes a free event. And plus, if you attend all the presentations, I'm pretty sure that you're going to get a baggage of information, and you're going to steal a lot of experience from our guests. So make sure you register for the events. David is already preparing the page, and you could actually sign up on the TimingResearch.com page, and we're gonna try to spread the word on social media as well. And we're very excited, very excited. I'm very excited to have you guys again on the show on our women's event. It's gonna be a blast. So thank you so much, Melissa, Marina, and Mercedes, for being with us today, and thank you, David, for putting this show together. It was so much fun talking to these wonderful ladies. And again, if you have any questions, feel free to email either one of us or David. Thank you so much.
Yeah, and I just wanted to add that, you can, everyone can go ahead and register for the event next week, and I will have more detailed schedule of presentations information available soon. So I'll be releasing that as soon as I can, but you can go ahead and register, or you can reply to any Timing Research email if you want the schedule as soon as it's available, and I'll be publishing that soon. So
sounds fantastic. Thank you so much.
I want to thank you all for being here. Great presentation. Just a quick reminder for everyone watching, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory, or you can also go to TimingResearch.com to get access to any of the past reports or any of the show archives there. And I just want to thank my guests again for today. Melissa Armo of thestockswoosh.com, Marina Villatoro of thetraderchick.com, Mercedes Van Essen of mentalstrategiesfortraders.com, and Anka Metcalf of tradeoutloud.com. Thanks, everyone.
Thank you, David. Thank you, ladies.
Bye.
Thank you.